So, you own a condo. You're probably paying those association fees and thinking you're all set on the insurance front. But are you really? That's the big question, and we're going to break it all down in this explainer to find out if you're truly covered.
Let's just dive right into the heart of it. Your condo association? Yeah, they have a huge master insurance policy. You help pay for it. So it makes sense to ask, why on earth do I need to buy my own policy on top of that? Well, assuming you don't could be a really, really expensive mistake.
You see, this is where we run into what I call the condo coverage gap. It's that space, that gray area between what your association's big policy covers and what you are personally on the hook for. And trust me, that gap is almost always way wider than people think.
So here's the key concept you have to get your head around. Insuring a condo isn't a one-and-done deal. It's a partnership, a shared responsibility. Think of it like this. The association takes care of the building's shell and all the common areas, but everything inside your four walls, that's your world, and it's your job to protect it.
To really understand this partnership, we've got to look at the two main players in the game: the big master policy from the condo association and your own personal policy. They have totally different jobs, and knowing who does what, well, that's everything. All right, so on one side of the ring, you've got the heavyweight, the condo association's master policy. And on the other side, you've got your personal champion, which is usually called an HO6 policy. Let's break down exactly what each one is responsible for. The master policy is all about the big picture, the shared stuff. We're talking the building's bones, the roof over everyone's head, the foundation it sits on, the lobby you walk through, the elevators, the pool, all the things that everyone in the building owns together. Now, here's where your responsibility kicks in. The master policy's coverage literally stops at your front door. Your personal HO6 policy takes over from the drywall inward. It covers your floors, your kitchen cabinets, any cool upgrades you've made, and of course, all your stuff, your furniture, your clothes, your tech. And crucially, it also protects you if someone gets hurt inside your unit. So let's really zoom in on this HO6 policy. I want you to think of it as your own personal financial shield. It's made up of a few key parts, and every single condo owner needs to know what they are. First up, you've got dwelling coverage. Okay, imagine a pipe burst. Total nightmare, right? And it just soaks and ruins your drywall and your beautiful hardwood floors. This is the part of your policy that swoops in to pay for repairing the physical inside of your condo. Next, we have personal property coverage. This is for all of your stuff, all the things you brought in to make it a home. If there's a fire or if someone breaks in, this is the coverage that helps you replace your couch, your TV, your laptop, basically anything that would fall out if you could flip your condo upside down and give it a good shake. And this one, oh man, this one is a biggie. Liability protection. Accidents happen. Let's say a friend is over, they slip on a wet kitchen floor and end up with a big medical bill. They could sue you. Liability coverage is what stands between you and potential financial disaster. It helps pay for their medical costs and your legal defense. It's a must-have. Finally, there's something called loss of use. And this one is a real lifesaver. Imagine a fire makes your condo totally unlivable for a few weeks or even months. Where are you going to go? This coverage pays for your hotel, for your meals, for those extra expenses, so you can live somewhere else while your home is being put back together. It's a huge relief during an incredibly stressful time. Okay, so you're convinced you need an HO6 policy. Awesome. But how do you make sure you get the right amount of coverage? Because it's definitely not a one-size-fits-all situation. And there are some common mistakes we need to help you avoid. First things first, before we talk about what to buy, we absolutely have to talk about what your standard policy won't cover. Knowing these exclusions is critical. Yeah, your typical condo policy, it's not going to touch damage from floods or earthquakes. For those, you need completely separate, specialized policies. It also won't cover things like a termite infestation or damage that happens because, well, you forgot to maintain something properly. So, how do you get this right? It's a pretty straightforward four-step process. Step 1, get your hands on your association's master policy. You need to know where their coverage stops so you know where yours needs to start. 2, do a quick inventory of all your stuff. You'd be surprised how fast it adds up. 3, think about your lifestyle. Do you host parties all the time? Maybe you need more liability coverage. And finally, step 4, pick a deductible. That's the amount you pay out of pocket that you could actually afford to write a check for tomorrow if you had to. All right, that's enough theory.
It's much easier to see how this all works when we look at a few real-world examples of how this insurance actually jumps into action when things go wrong.
Let's start with a kitchen fire. A little grease fire gets out of control. It scorches the walls, ruins your cabinets, and destroys your dining room table. Here's how your HO6 policy becomes the hero. Dwelling coverage repairs the walls and cabinets, personal property coverage buys you a new table, and loss of use pays for your hotel while all the work is being done. A total disaster becomes manageable. Or what about this classic condo nightmare? A pipe bursts in the wall while you're at work. You come home to a flooded floor and a bunch of fried electronics. In this case, your dwelling coverage gets to work on repairing or replacing those floors, and a personal property coverage cuts you a check for that soaked laptop and TV. And for our last scenario, let's talk liability. A guest trips over a rug in your living room and breaks their arm. They decide to sue. This is where your liability protection is worth its weight in gold. It steps in to cover their medical bills and, just as importantly, the massive legal fees for your defense, saving you from a devastating out-of-pocket expense. Look, if you remember just one thing from all of this, let it be this simple idea. The master policy protects the building. Your personal policy protects your home. And those are two very, very different things. So that leaves us with one final big question. And this one's for you to think about. Now that you know the difference, I want you to take a hard look at your own situation. Is your coverage actually enough? Is it enough to turn what could be a financial catastrophe into just a manageable inconvenience?